Hi, this is Farzan Ghadially, your finance expert. Today at midday, we will try and analyze what has happened to the stock market and the economy on the whole, and what should investors really do. As mentioned earlier in the previous video, the stock market was heading towards a correction. The stock market did correct. We had the Nifty correct by about 8 to 9%. The big question is this a market crash, a small dip or a correction in a really big bull market? A lot of investors have really faced the brunt. It's not because the Nifty is corrected 8 and 9%, but at an individual stock level, corrections have been 20, 25, 30%. So who are the people that are really afraid? This market really had one unique feature: first time investors. What we've really seen is about 2 crore demat accounts that have really opened. Who are these demat accounts? Small retail investors that have put in 40,000, 50,000 into various stocks, into various mutual funds, and they have invested for the first time. When they've invested for the first time, 18 months, they picked the stock and it went up. The market really rewarded. So it was a very pleasing experience. For the first time in 18 months, we've seen a correction. So there is a lot of panic that's really there. What is important? How is this different from the previous corrections in the Indian market? In the last 4 decades, if you look back 40 years, corrections have really been there to the extent of 20-25% at an index level. But what was different that time is foreign portfolio investors were calling the shots. If foreign portfolio investors bought, the market really went up, and foreign portfolio investors sold, market would crash. Today, these small investors, 2 crores in number, say about 40-50,000 per account, gives you 2 lakh crores. That's a huge sum of money. Where have they invested? They have not invested in very large companies. They have invested in growth companies, in mid-cap companies, where they will see exponential growth. So this is really different from what India had witnessed before. So should investors really panic? There was a correction that was expected because markets don't go up in a linear manner. They will not go up one way. Correction did happen. So it's a good time to stay invested. Should you panic? Definitely you shouldn't panic. Stay in quality names. But what will be different from now to the next 18 to 24 months is the men from the boys will be different. A lot of companies that have done well, they are governed by good managements, will continue doing exceptionally well. They will give you returns. The companies that are not very well managed will not really do well. So the market breadth, as we call it in technical terms, will reduce. Few number of stocks will do well, large number will not really do well. Maybe the headline index, that's a Nifty and the Sensex, may not perform very well, but the other stocks will do well. What is there on the economy? India has really witnessed a V-shaped recovery. What are we witnessing? A capex cycle. New cement plants are coming up, new steel production units are coming up, all greenfield. This kind of capex is very positive news for the economy. But has this already been priced in the stock market is the biggest worry. In the long run, if you have a 3 years to 5 year perspective, you're very well placed and you should stay invested. Do not have really very short term time horizons. It's very important. Just to look at it this way, if today your stock or your investment compounds at 20% for 20 years, at the end of the 20th year, you have a 100x return. 100 times is what you've really made. So don't try and chase stocks that go up overnight or go 20 times and 30 times in 1 year. Even if you're getting 20% for the next 20 years, you've created a lot of wealth. Take advantage of the capex cycle. Put your money in companies that will really help in this capex cycle. Real estate is really picking up. Maybe do not put money in the real estate companies because you may build a flat or build an office. But due to the virus, it may not get sold. When you don't sell, you may not realize profits. But the suppliers to these real estate companies, the proxy plays as we call it, is something that investors should look at. Way forward for India is technology. Technology disruption has been the theme world over. In the US markets, it was very popular to invest in what is known as the FAN stocks, right? Facebook, Alphabet, that's Google, and Netflix. So if anyone invested in these FAN stocks, a lot of wealth has been created. India is moving there. India is creating its FAN stocks. It will create companies that will really disrupt businesses. When we talk about technology, I don't really mean that we are just talking about pure play IT technology. Let's look at the automobile sector, the EV play, electrical vehicle play. Companies that have done R&D, invested in the EV play have performed exceptionally well. Large market leaders that have not really played the EV thing are really laggards that are really there today. So technology disruption that is there. Fintech companies. Today we have one of the largest fintech companies that is really listed. 1 lakh crores plus market capitalization. What are they going to do? It's not they are going to replace the banks. But what are they doing is they are really eating market share from these private sector banks that were trading at very high valuations. So the disruption in risk capital for startups is going to continue. We in India will get our new fan stocks. The technology companies will come in. They will get listed, and really investors should take advantage of this. In a long run, stay invested to 3 to 5 years. The correction is a great time to buy good companies you believed in. So if you like the company, you like the story, you like the management, and it is 25-30% down, look at it at the positive side. You have an opportunity to really invest. The worst of the economy is behind us. I think the good days are really ahead. I think the next 24 months are going to be very interesting for the Indian markets. Do not get scared. One form of the virus or another will keep coming up. We will have these mutants and mutation taking place, but it is not going to result in a disruption. Look at technology, look at new age companies, look at the long-term perspective, and I think a lot of wealth will be created. Till we meet next time, enjoy the Santa rally, enjoy the rally in the markets that's going to probably last till the end of the year. Be safe, take care of your portfolio. Most important, do not panic. As they often say, you never sell in panic and never buy in euphoria. Till we meet next time, really have a good time, be safe, and take care of your portfolio and a lot of wealth creation. Thank you.
Subscribe to Midday India. Get direct notifications on all our videos by clicking on the bell icon.